What's up, everybody? Dan Warmby with Keller Williams, West Ventura County here. Hope everyone's doing great. So, you've probably been hearing about inflation everywhere recently, and there's a good reason for it. Inflation hit 5% in the past year. Now, that's the biggest jump in 13 years. Now, some of that is due to the lockdown. If you think about it, last spring, no one was out traveling, going out, spending money into the economy, and businesses were scaling back massively. Now, as the economy reopens, prices are shooting up. Hotel prices are up 10%, airfare is up 24%. I think most people are expecting that to be fairly short lived as prices settle back down. But I think what's really driving inflation in the long term is the Fed's balance sheet. The central bank's balance sheet will top $9 trillion by the end of 2022 and remain constant in size through 2025. And when the Fed does start tapering down, they'll still be purchasing assets for at least another year. It's pretty complicated how it does this, but the Cliff Notes version is that the Fed is a banker's bank and it doesn't pay for assets in cash, it just credits the selling or borrowing bank's account at the Fed. So basically, the Fed will have created $9 trillion out of thin air by the end of next year. I'm not an economist, but increasing the money supply by trillions of dollars would seem to make all the other existing dollars worth less or cause inflation until at least 2025 when the Fed starts reducing its balance sheet. And remember, that's not a foregone conclusion because the last time the Fed tried to reduce its balance sheet, the markets did not react well. So as a homeowner, what does all this mean? Well, the good news is there are a few traditionally safe havens during periods of inflation, and real estate is definitely one of them. Also, keep in mind that 87% of all home purchases are financed, which means they're leveraged, which means that while the value of the house rises by the rate of inflation times the cost of the house, not the value of the down payment. So while over time inflation might double the value of your house, it might actually quadruple the value of your down payment. And if you took out a fixed rate mortgage, which most people do for their primary residences, you're doing even better because your payments are in inflation adjusted dollars and you're paying less for the loan than you did when you originated it. So while I've been saying, for a while that the government's monetary policy and economic policy would be aimed mainly at protecting the largest store of value that most people have, and that's the equity in their homes. And it looks like that's going to continue to be the case. So really, to wrap up, while this little run up in inflation should be short-lived, the long-term inflation caused by the largest Fed balance sheet in history is here to stay, which means residential property is going to continue to be a great investment into the foreseeable future. So anyway, I hope all that helps. If you guys have any questions, feel free to leave them in the comments. Don't forget to like and subscribe, and have an awesome rest of your week, everybody.